again, this is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Thank you for joining us for our market insights and observations. Today is Tuesday, October 17th. We're going to talk about 3 topics that are moving markets. We're paying attention to them, so you should be too. So let's get right to it, and thanks for watching. So right out of the gate, we're going to talk about the bank earnings. Earnings season is officially underway for the third quarter of 2023, and that really impacts sort of the direction of how the markets digest the information. We'll talk about that. The earnings season is beginning, and as well as the House Speaker update. Let's start with the House Speaker right now. Currently, as I'm filming this, this is a real-time update of the Jim Jordan is potentially going to lose the first round as the Speaker of the House, and the reality is that this is a process. We'll see if any drama plays out of this, but let's go to the odds of actual government shutdown. And according to why this is important is they're betting odds in the market to show, will we eventually get a House Speaker? The answer is yes. Okay. What's happening is that horse trading is taking place for a vote. So more than likely what we're going to find is we will have a House Speaker, but somebody's going to have to get something in return for their vote of confidence in that direction. Now, why that matters and why we're paying attention to it, because that's basically where the dollars are going to go. Meaning, about a month ago, there's not so much in the budget or consideration for defense spending. But as we've seen, obviously we've had Ukraine for a while, and we have all the geopolitical tensions. Now you have that breaking out in the Middle East. So everyone who is in Washington is going to be looking to spend more dollars towards defense, allocating it to other countries for support, and as well as increasing our U.S. defense budget. So then, on our side, that's where we follow the money. We position our clients' portfolios to take advantage of those dollars following all the way through Washington to, let's say, defense contractors. And if you followed along, I've talked about this about several times on different different news outlets and media outlets with regards to just this. So that's why it's important. This is a chart of the third quarter earnings season. Here's what's interesting. What's really interesting is before we started, there was an estimated negative earnings, sort of, if you take all 11 sectors of the S&P 500, are we going to see any earnings growth? Yes or no? But as of right now, we got a 1.1% growth rate, and if we look at next year, they're basically forecasting a 12%. So there's earnings growth. Why that matters, Rob? Why do I even care about earnings? Earnings move the market, right? So when you have all of the geopolitical tensions out there, you have all these different aspects of what could go wrong. If companies are making money and returning that to shareholders, stocks will go up. And that's ultimately what we're seeing. So, but there are a lot of questions on the horizon that we have to keep on our radar. But this is just showing that both sales and revenue and earnings for the S&P 500, we're seeing growth in this quarter, and we're seeing projected growth for next quarter. This is sort of the earnings week, all the different companies that are coming out with earnings, and what to watch. Obviously, we have the UAW continues their strike. But tomorrow we have retail sales, which is a sign of the consumer. Housing starts, existing home sales, so the sign of, again, the U.S. consumer and the housing market and the health of that. Keep in mind, on Thursday, we're going to have Federal Reserve Jerome Powell speak, and that's going to be important to see what he says on that. That could be market moving. In the meantime, we're going to talk about watching all these earnings reports. The big banks have been positive. Specifically last week, we had JP Morgan, who really crushed it both on the top line and bottom line. It shows that operational efficiency is critical. Today, we have reinforcement of that with other banks reporting, large U.S. Major banks. And that's important because these are cyclical in nature, meaning banks lean heavy on the U.S. consumer as well as lending. And so if we want to see if there's trouble on the horizon, you want to pay attention. All of these banks met and beat expectation and showed even growth and forecasted growth on their earnings for the next foreseeable quarters, which is why markets are taking that as a sigh of relief, why markets are actually up as a result of that. So it's important to sort of not only see what the results are, but what the CEOs and the management teams come out as well as what they forecast. But right now, we're paying attention to earnings growth. We'll see how the remainder of the third quarter earnings reporting season ends, and I'll be updating that as well. But that's sort of a look view around the market and why markets are moving today. Thanks for watching. We'll see you again next time.